Okay, we're going to be covering SMTs in this video. SMTs are a confluence when looking at correlated pairs. Now, what are correlated pairs? Correlated pairs are going to be the NQ and the ES, and just what that means is that price moves in the same fashion. So, when NQ is creating a high, a low, a higher high, and a higher low, ES is likely doing the same. You kind of see in the example to the left where price is pushing higher, then pushing lower. Same thing on ES on the right side. Price is pushing higher and then pushing lower. Price in this sense is very correlated. Now that we know what that means, when both assets are moving in the same direction, we can use these correlated assets to our advantage. Now, a divergence in price is when one asset, instead of creating a higher high in this sense, it creates a lower low. So let's say NQ is moving in this fashion, and ES, instead of stacking in another low, it instead creates a lower low, taking out the previous low. This would be a divergence in price, and the assets are no longer correlated. That would be an SMT. Now, what I just covered is a bullish SMT because in this sense, we are creating higher highs and higher lows, but one asset decides to take out the previous low. This would be a bullish SMT because while one asset is taking out the lows, the other asset stays in its range. Now let's go over a bearish example where price starts at a high, creates a low, creates a lower high, then creates a lower low. Now this is NQ. Let's see what ES is doing. ES also starting at a high, creates a low, creates a lower high, and creates a lower low. Price in this sense is very correlated. Now let's give an example of an SMT. So NQ in this sense, instead of creating another lower low, it instead comes up and sweeps the previous high, creating a higher high. ES is far away from that high, while NQ in this sense is trading past that high. This is a divergence in price where the assets are no longer correlated and no longer in sync. Before we continue, here's a better illustration of what I was just saying. A bullish SMT where one asset is further ahead than the other, and a bearish SMT where one asset is further ahead than the other. So in this sense, NQ is trading higher, further away from that low, while ES is taking out that low instead of stacking another higher low. Again, in the bearish example, we have a high, create a low, a lower high, a lower low, but an SMT would be where the opposing asset, instead of creating that lower low, we instead push higher and create a higher high, taking out the previous lower high that was in place. You can see how this asset is much further ahead than this asset. And this could be either or, this could be NQ, and this could be ES, or this could be ES, this could be NQ, right? Depending on the asset you are trading, you want to be paying attention to the opposing asset to see if it is taking the draws on liquidity you are paying attention to. Okay, now let's cover the example of an SMT here on these charts. On the left side, we have NQ, and on the right side, we have the ES. You guys can clearly see here where we have marked out this high on both assets, but ES has clearly taken it before NQ did. That would be a bearish SMT. You guys could see before I started clicking play, where both assets were indeed correlated, both trading lower, but ES decides to trade ahead of NQ, taking out our draw on liquidity, which would be this buy side, before NQ had the chance to. That would be a bearish SMT in price. One thing to know is that you will spot SMTs all over the place, but it's important that you know that not all SMTs are important if they don't align with some higher time frame idea or level of interest. Now, what that means in this example, you guys can clearly see that this would be a draw called all-time highs because we are at all-time highs and there is no other draw before that. This is really rare. It's only when we're trading in all-time highs of the market. And in this case, we are. So that would be a prominent draw on liquidity, one that I haven't covered, but you guys can just see this as all-time highs. So this SMT would be important, and if taken on one asset, we can expect a reaction from this. These are SMTs to be paying attention to. But if this wasn't all-time highs and it was previous day high, still a prominent draw on liquidity, it would react the same way, right? We have previous day high here. ES takes it on the right side while NQ is falling behind. What can we expect? Some sort of reaction lower, or price is going to correlate with the opposing asset and start trading higher. You can see that NQ then correlates with ES, but as you guys noticed previously, ES was the first to take that high. Now let's cover a better example. All-time highs would be our draw again, coming into the next day, and we would just mark these highs as a prominent draw on liquidity. We were expecting for the session to deliver higher, but let's see how these sessions react, whether they correlate or create divergence in price. What my eyes are drawing to are these lows and the LRL above it. Now let's see how price reacts. So in this case, you guys see that ES first open, traded to these lows, creating a bullish divergence in price, where this leg on ES did sweep this low, but on NQ, it did not, and it just delivered to those highs. This would be an example of a bullish SMT, and we would mark it like so. Now, what happened here? We knew that this low was also a draw on liquidity, and coming into the market, what I would expect is for a sweep of liquidity lower to then deliver us higher. Well, NQ didn't do that, but ES did. So if we were paying attention to both assets, we would see it as, okay, ES took our draw on liquidity. Now NQ is likely to deliver to all-time highs. Now, like I said previously, not all SMTs are important, but SMTs at prominent draws are important, right? And in this case, all-time highs as our draw, we would expect price to deliver lower before delivering us higher, because that would be the anticipated movement to send us higher. Not only did we get a bullish SMT to send us to our draw on liquidity higher, but this also put in play a bearish SMT where ES never delivered to those all-time highs. So this puts in a bearish SMT with the current leg, just like so. The same thing with all these other highs. These are all bearish SMTs with this leg. Why? Because NQ took out not only the all-time highs, but the highs on the way there, including these highs here. All these highs were already taken on NQ, and in this case, NQ is the leading asset, while ES is falling behind. Now let's get into some other examples. Again, I want to note that an SMT is only important when it is taking out major draws on liquidity, like session highs or session lows, or prominent draws on liquidity like previous day highs, previous day lows, your previous week highs, and your previous week lows. So what you want to look for if you're trading NQ, for example, is looking for ES to either take those draws first, to then see NQ deliver those draws, just like I showed you in the previous example, where NQ takes out previous day high first, and ES no longer has to, and then starts pushing lower, right? So if your overall bias was bearish on ES, then taking out previous day highs on NQ would have gave you more confidence in your setup to trade lower. All right, here we're covering another example. And of course, all-time highs is our draws again. And then do we have any bullish SMTs? Let's look at the 1 hour to see if there are any SMTs. And there is. You guys can clearly see that ES had swept these previous lows here, giving us a higher time frame bullish SMT. And NQ has not. It is moving further up ahead. But you can see with this low, ES has already taken it. That's our bullish SMT. Let's go on the smaller time frames so we get any confirmation of price pushing higher and go on from there. Let's skip through price. You guys can see that ES puts in the bullish SMT and NQ delivers to all-time highs. That now gives us a bearish SMT. Let's see if ES will correlate with NQ or start rejecting price and trade lower. You guys can see ES then correlates with NQ, but as we've seen earlier, NQ was the first to deliver those all-time highs. So looking at the chart now, do you guys see any SMTs? My eyes instantly draw to this high here, where if you see my cursor on the right side, ES has already taken this high. So on NQ, this would be a bearish SMT because this high was already taken here on ES. Not paying attention to this high because this high was also already taken here on NQ. So my main focus is drawn to this high that doesn't have the SMT. And same with this high here on NQ. These are pretty correlated, So let's see how price reacts at the bottom. Looking at the bottom of PA here, I'm also spotting a bullish SMT right here, where this leg on ES did take out that previous low. Let's see how price reacts. You guys can see as ES continues pushing higher, NQ decides to trade lower and take out this previous low right here, and ES has yet to take that low. Let's see if the assets correlate or if ES continues pushing higher. You can see that NQ ended up pushing even lower, putting in an SMT here, and putting in a bullish SMT on the correlated asset. ES no longer has to come and take this draw on liquidity because we know that NQ already did that. And that kind of summarizes the bullish SMTs and the bearish SMTs. Now let's cover SMTs when it comes to fair value gaps. An SMT when it comes to a fair value gap is where one asset fills the gap and the other doesn't. So in this case, we have a 15-minute gap here. And if we are anticipating for price to continue expanding higher, what we would want is for price to fill this gap and trade higher. Now, if you're only looking at NQ, that never happens and you never get an opportunity to enter on this trade. But if you're looking at ES, what does happen is that ES does fill the gap here on this candle. See this candle here does end up filling the gap and price starts to expand higher. Now, if you're on NQ, you would have seen this as a bullish SMT and you would have marked it like so. With this SMT, you no longer need the confirmation on NQ to send price higher. You would simply react based off what you're seeing on ES. And if given the opportunity, you would look for a long position anywhere in the area because the higher time frame confirmed it and ES put in that bullish SMT to then send price higher. Just like so. This asset didn't fill the gap, but this asset did, giving the bullish SMT and sending price higher. I'm hoping this emphasized the importance of SMTs when it comes to your draws on liquidity and when it comes to fair value gaps. Now that you guys understand this, you guys could implement this confluence into your trading. Just open two charts, NQ and ES. But now that you guys can visualize it, implement it, and I hope this is useful in your trading.